I would like to introduce my panelist on cybersecurity. We try to get a different, broader spectrum of different perspectives. So we're very pleased to have Jason Kelly from AIG, who is the head of International Financial Lines, where he covers, apart from North America, all the financial lines business in the world, obviously including D&O, PI, and cyber risks. And then on his left, we have Daryl Pereira, who is the partner and head of cybersecurity for KPMG. And he's also my old colleague at the KPMG practice in Singapore. And then on the far left, we have David Piesse, who is the Chief Risk Officer of Guardtime, and he's also the chairman of the IIS Ambassadors Program. He done a lot of work for cybersecurity using blockchain, which are already in production. So I think you can all hear me with this mic as well. So before we begin, I just shared a little bit of a fun fact. I have looked at the LinkedIn profile of all our panelist speakers, and I look at what is the LinkedIn mutual connections. So with Peter, I would release the information that we actually have 453. With Jason, we have 263. With Daryl, we have 158. And then with David, whom I've known for years, 3,587. So I hope this information won't be hacked. Well, just to put things into context, if you recall from yesterday with the Institute's study, it pointed to number one concern is cybersecurity, where 69% of the respondents for Asia Pacific saying it's number one concern, whereas for North America, 71% of the respondents saying that it's number one concern. So it is actually very worrying in terms of top issues for our entire industry. And how we would like to address it now is to spend about 40 minutes with the panelist insights and about 10 minutes with Q&A from the floor. So if I start with the first question, I'd like to ask Jason first, from an underwriter's perspective, is what is your role and in addressing cyber risk in your own organization, AIG, and in the industry as a whole, and with your customers and policyholders?
Sure. Yeah. Thank you, Raphael. And look, really pleased to be here this afternoon and to be part of this distinguished panel. So thank you for having me. And I have to say, perhaps I'm regretting having the cyber liability remit after Peter's presentation. So makes me a little bit nervous. So if I start with the first one, within my own organization, what are my own responsibilities? First and foremost, it's making sure that all of our underwriters within my team are properly trained and understand their own responsibility. If you look at AIG's own claims data, our fourth most frequent issue is actually own goals. It's employees that have been negligent, right? And either it's updating software, leaving thumb drive somewhere, leaving the network open. And so it's making sure that there's continuous, and when I say continuous, I mean continuous training that's taking place, because people forget things all the time, and I probably struggle to remember what I had for breakfast today, right? So we need to be continuously reminded about the exposures that are out there. In terms of clients or the industry as a whole, we've been doing a lot on the education front for some time. And if I give a brief history lesson to the broader group here, I agree with I think all of Peter's comments in his presentation, except maybe from the standpoint that there are, I think, enough data points out there today, because cyber goes back to 1999 coming out of the US as a whole, and AIG actually was the first to bring that cover for it. Granted, it was more like a network liability policy than it was a cybersecurity policy, but data points do exist. There's 20 plus years of history behind it. But the evolution of the risk has changed dramatically. And so what we're trying to do is either, through third parties, partnerships that we have, even through such companies as KPMG and others, bring that education forward to our clients. And as an example, DDoS attacks were referenced earlier. If you go back and look at our own claims data, 2014, 2015, we saw quite a few DDoS attacks. But ransomware today would be where we see a lot of the frequency coming forward of network interruption, system failure, security failure types of incidents. And again, what we're trying to do from a thought leadership standpoint and through a client engagement standpoint is bring as much education and awareness around the issues that we can.
Thank you, Jason. I was at that ARMEC conference in Harrogate in England about 2 weeks ago. And what a lot of the underwriters in Europe have done, not only just writing cyber cover, but they've already aligned various vendors in terms of responses, first instant response, forensic investigations, even crisis management team, to public relations. So I think that in itself is a big value to policyholders, not just the cover itself, but actually all of the vendors that can manage this together.
That's absolutely right. And in particular, I mean, if you look at Fortune 500s, it's not to say that they've solved all the world's problems, but largely they have an idea of the issue. But as you get down into the middle market and the SMEs, they really are looking for that support, from those cyber specialists, public relations people, et cetera.
So Daryl, from a cybersecurity professional services firm point of view, what is your role and the role with the organization and the role with the industry?
Yeah, pleasure everyone to be here today. So in terms of KPMG and what we do, everyone knows the firm as accountants, auditors, and maybe tax managers. Maybe fewer of you know that we actually have a cybersecurity consulting team. Just for example, in Asia Pacific alone, we have over 3,000 cyber professionals. And in the firm here in Singapore, I lead a team of 160 cyber professionals, 4 partners. And what we do is help clients, all sectors, obviously banking and insurance being one. But lately, the focus of cyber attacks has moved on to other sectors. For example, hospitals and healthcare. I was most recently speaking at a university earlier today, and so attacks on the education sector, hotels, property developers. And so what we do is actually a bit like what you mentioned just now, is educational to begin with, right? So we kind of phrase that as a stage 1 effort, because you got to raise tone from the top. But then we move on to stage 2, which is how ready is the organization to withstand a cyber attack? And so most people don't actually know their cybersecurity posture. And one way in which you can check your readiness is do a review against an international standard, for example, ISO 27001 or NIST, and there's some other types out there. And we do a lot of these kind of reviews. A lot about my business as a cyber professional is telling people the bad news, that you think you're well and ready, but in these areas against the standard, you don't measure up. And then we go into stage 3, fixing those gaps, right? So, as any good audit firm, they love audit reports. I don't call them audit reports, I'm not an auditor, but I call them gap reports. It's a little bit nicer, but same thing in the end. You've got an issue, a recommendation, and then we actually go in there and implement and design those controls. And then we come back around to recovery, which is often forgotten. When you have a cyber attack, and I say when, right? It's not if. You're guaranteed these days to be cyber attacked at some stage of your company's life cycle within the next 5 to 10 years. How do you recover and respond is actually a function of how quickly you detect the said attack. Now, the majority of companies in Asia Pacific have a very long cycle between when the attack or intrusion first occurs and when they find out. It's in the order of over 360 days in Asia Pacific. The same statistic in the US is around 90 to 120 days, right? Depending on which survey you're talking about. So the question begs to be asked, why is it in Asia Pacific companies take so long to detect they've been compromised? And then you get to the final stage. You've been attacked, you've detected it nearly 1 year later. What do? A few people have a recovery plan in place, and so they then panic. crisis mode occurs, and you call the authorities, the regulator, and all hell breaks loose, right? So these kinds of things can be pre-planned. So a lot of our work is actually planning for the inevitable cyber attack, a recovery plan that covers different types of cyber scenarios. And lastly, we advise clients on, do you need cyber insurance, yes or no? The majority of companies are not ready, maturity-wise in Asia, for cyber insurance, because you first need to know what your security posture is, build up your maturity within the company, which we help do, before you actually think about risk transfer, right? But you can do both at the same time. The problem here, though, is many insurance policies will not allow you to claim if you don't have some kind of modicum or baseline of security readiness. Right.
Yeah, so sometimes the warranties would impose that if you don't have the measures in place, then the cyber risk will not be covered.
Correct.
But I think that a lot of the issue is a lot of companies, especially the SME, don't even have cyber cover, so they're entirely exposed.
Well, I spoke to 50 SMEs earlier today, the institutional of training companies and the like. It was very basic cyber hygiene discussion. The majority of them didn't realize that passwords are not strong. They thought a strong password was something that had 6 characters and upper and lower case and symbols and numbers, and that was fine. And we all know that that is not true, because the IT guys will tell you analytics today and the computing power we have, those kind of passwords can be cracked within a few hours, at most 3 days, using computational CPU power today.
Right.
The antidote to that actually is a whole bunch of other things besides the passwords, such as single sign-on, multi-factor authentication, including the password, and some sort of biometric, for example. Lots of things.
Then I must have a stronger password for my LinkedIn account.
You should, yes.
So David, so from your point of view as a chief risk officer and doing a lot of work on cyber security through blockchain, what is your role with Guardtime and the role with the industry?
Well, Guardtime was founded based on the first state-sponsored cyber attack in history, which was in Estonia in 2007. So I've been involved right since the beginning of Guardtime. So it's actually built on cybersecurity, but and covers a lot of the defense industry, and has been for the last the last 10 years. My role as Chief Risk Officer, apart from the fact looking after the internal risk of people in the company, has been really to create the insurance blueprint for Guardtime. And we recently launched the InsureWave with EY that was mentioned earlier, where we've got 1,000 ships floating around the world right now doing insurance for Maersk. And I'm on that team. And currently putting in the cyber security in underpinning that from satellite through to the devices on the ship, right the way through to the smart ports. But the concept here, the cyber security triangle, as put forward by the CIA, is perimeter, availability, encryption or privacy, and data integrity. And we concentrate on the data integrity piece, which is probably, over the last few years, has been the least part of the cybersecurity triangle that's had attention paid to it, but has also been the area where there have been a lot of attacks. So the blockchain concept of Estonia, which was founded, is the protection of the data layer, which is one of the prime directives of blockchain. So what do we do with this? It's called cyber integrity. We mathematically apply formulas to the data, the repositories and the networks that they operate on to get truth rather than trust, because if you trust data on a network without having any metrication to look at it, it's nonsense, because you don't know what's happening and you're relying on trust. If you mathematically apply so that we know what's going on, not only do you get the truth, it also stands up in a court of law. And this kind of metrication and evidence on a blockchain separated from any data maintains privacy, and at the same time enables us to know who is responsible, and we can indemnify that. So for the insurance industry, we will actually have a much stronger sense of liability, and I think we can provide better covers if we have this kind of metrication on our data.
Yeah, I think one way to really accelerate the data privacy and security is through legislation, which some countries are already happening with Australia, for example, and that would really speed up organizations and the way that they need to comply and gear up their security issues. I think just to bring things to light, I'd like to ask the panel on real case studies and experience. Peter, you must have come across many breaches and incidents. Can you share with us one case study where you've actually been involved in the issue, the solution, and some of the impact to the organization and what they can do about it?
Yeah, I can definitely go into insights specifically, naming the company Nuco specifically for this particular case. This company had a major cyber attack in its form under NotPetya 2017. It was on 27th of June. By the way, many were on 27th of June, so don't guess it's Maersk or whatever. It's not. That particular company, their email systems were down. It was on a Sunday late afternoon when I was contacted because we did a board stress testing before. The risk was addressed previously at board level, given that cyber is an absolute board level topic because of fiduciary duties. Having said that, the main backbone, what we crystal clearly recognized quickly, was that at the end of the day, when you work with cloud, right, you decrease a lot of your OPEX cost, but at the same token, you might suffer at the end of the day when it comes to risk management. Particular, your OPEX goes down at the end, but obviously your cost related to cybersecurity might actually go up at the end.
Is it because of third-party administration on the
well,
data
you
centers?
don't have control, actually. You outsource. That leads into various issues. One of them is obviously, from a data privacy point of view, you are data controller, you hold the data of your customer, you outsource it to a data processor, means liability is always going to be with the controller. If you lose as a controller the data on the GDPR, actually, you're going to be liable. Second point, which was very much on, yes, they had some issues in investment when it came down in as far as their legacy IT assets were concerned. But fundamentally, what I led to leave here as a message was the following thing. When you have a cyber incident, you have 3 phases. That case took 15 months to recover, 15 months. The total cost was a significant 2-digit million amount, economic loss, not insurance loss, economic loss at the end of the day. Now, there are 3 phases. The first phase is the so-called triage phase, which is pretty much the first 2 to 3 months normally. Triage, where you go into and you need to understand what has happened exactly. People overreact normally immediately. CEOs try to control everything and want to immediately react, want to notify. One of the things in GDPR at the moment is people notified often too early when they shouldn't have notified because they want to be over careful. And what happened there was then obviously you had to bring in forensic. You had to look into specific data regulation laws. That was about between 10 to 15% of the cost. The major cost was in the middle, which is really the cost where you engage the management. Engage the management to go out, specifically talk to clients, where you might have to reduce at the end of the day prices, margins. And that leads into you want to protect your business, no churn rate. And then the last one, which is if you take 10 to 15% for the first one, you calculate maybe 35 to 40% for the second. And then the last phase is very much of the business productivity case. We have a number of pending cases right now out there. Earlier this year, we had cases published. I mean, one of them is obviously Norsk Hydro, which has been published. This type of cases, they take time until you really can see the implication. And one of the biggest issues, what is your implication on your supply chain, on your productivity, on your return on investment? You only see this after months, and sometimes even only after a year. And was it a big challenge? Yes. Was it good? Absolutely, because they buy now insurance. They now have established stress testing at board level, full level. And most important, they put the chief security officer on the board, which you very seldom see. I see it very seldom, for instance, in Asia, which is totally wrong. Cyber needs to be fully represented at board level. And board members need to feel the consequences of their actions. If they don't feel the consequences, they ignore it. That's bad. Cyber goes together with analytics, it goes together with blockchain technology ultimately as well, but data and cyber security go hand in hand. If you can't understand the two, you're going to fail. That's a big disaster.
Chief security officers on the board, I think, is not very prominent in Asia.
No, it's not. I can tell you it's maybe, if the pickup for cyber in cyber insurance affirmative in Asia, we're modeling that right now for our exercise, obviously for the cyber pool here, is between 1% to 3%, depends how you want to define it. Without silent cyber, if you want to see how many chief CISOs are sitting on the board in Asia, we'd probably be in the same range as I indicated, but more towards 1% from my point of view.
So Jason, can you share with us a case study from your international experience where, want to illustrate the problem and the sort of claims that's been settled?
Yeah, I certainly can. And I love sitting next to Peter here because I think he's the greatest advocate for the need for this troika you were referring to as government and cybersecurity and insurance. And insurance is only one component of the overall piece. In part, I think the reason that the purchase rate of cyber is so low is because it's still relatively new to the industry. I mean, it didn't even make it into this part of the world until 2012. So it's new, right, from that standpoint. Two, the legislation in a lot of the countries really didn't start evolving up until around 2012 as well. And there are some countries such as Korea that now mandate the purchase of cybersecurity for financial institutions. You have the Philippines, which now has strict penalties for sensitive private information from that standpoint. So I think the legislation is evolving, and I think that will help push people to purchase insurance and get the proper chief risk officers, CISOs on the board, et cetera. But if I share some claim stats for you specific to this region, because everyone says there aren't any claims in Asia, I can tell you there are. And we've been bringing this insurance to market here since 2012. And we've had 283 incidents from the beginning to today. And you think, well, Jason, that's not very many. But keep in mind, it's the chicken or the egg philosophy of, we didn't have a claim until someone had a policy. But of those 283 incidents, 73% of those have occurred in the last 2 years, right? So there's no question, that there's frequency. And if we talk to, what are the hot industries in terms of where we're seeing breaches, actually, first and foremost is hospitality. And so the example I'll share with you quickly is it was a breach that we had in Southeast Asia with a hotel chain. So they realized that they had a breach. They quickly shut as many things down as they could. They reached out to outside counsel, which was recommended by us and which we'll call a breach coach. And the breach coach did a quick assessment, of the overall issue, and then we dispatched what we thought were the requisite cyber experts to come in and help. So flew those people in overnight and had them look into the network. So who's in there? How do they get in there? What do they have, et cetera. And for the most part, that group of forensic professionals was able to get things back up and running within about 30 days or so. So relatively quick, and it obviously wasn't an overly material thing. At the end of the day, it cost about $1 million US. The good thing is again, this company did have insurance. The bad thing is they didn't buy very much insurance, and so the limit was relatively low. So they were partially uninsured. But the prevailing view, not just I think for this company, and I can only guess what their view is, but the prevailing view around the region as a whole is that we're not the United States, and we don't have third-party liability. We're not worried about class action litigation, so let's just buy small limits, right? And that'll kind of carry out the forensic cost component. But actually, the forensic costs, can cost quite a bit from that standpoint. So we have many examples like that, but I would say that's fairly typical.
How many of these 283 incidents which were notified to you ended actually into a damage or financial loss or liability or cost?
So liability to third parties is quite few. The overwhelming majority of the costs would be the forensic costs.
It's interesting to see because for the modeling exercise we're undertaking right now, right? On a global basis, we are looking obviously at specific scenarios, a very broad scenario, very severe scenario. There we're looking at hit ratios notified, right? We say certain amount of notification of policies between X to epsilon. But of the notification side, once you notify, and you have a broad policy, obviously given that, then we're thinking of about can up to go to 3/4 in some jurisdictions, And then you have to look into the silent cyber exposure, which will have a lower trigger percentage, but it's absolutely exponential at the end.
And I think that's the hot topic that everyone's talking about now, and I'm sure something we'll get onto later in this conversation today.
Well, I think another issue is a lot of the policyholders or corporates who are buying the first ever cyber policy, they just dabble in it and buy the low limits without adequate coverage. So I think your example could be that one. So what about Daryl? What about give us an example of the customers that have been breached in terms of cybersecurity?
Too many to name. Peter's example was good. So I was trying to toss up between talking about a bank we worked at or the big one in Singapore, SingHealth cyber attack, which we're still working on. I think, look, SingHealth, everyone's read the report. If you've lived in the region or certainly lived in Singapore, the reports come out. It's freely available online, COI report. I had nothing to do with the report. But the key learnings from SingHealth was that, and Peter's identified the key concern here, the security function was embedded within IT. And so cybersecurity was seen as being a technology issue rather than a whole of organization issue. So nothing I'm saying here is, is private information because they published this report a while ago. But certainly the key concern around cybersecurity we're seeing rearing its head a lot of the time is a lack of recognition at the board level as well as at C-suite level, any cognizance or concern around cyber concerns. And it's been relegated to an IT problem. It sits with the CIO. Most CIOs will tell you that actually they're not the right people to solve the cybersecurity issue because, and similarly, and I can use the analogy of a Big Four firm. People here, I work at KPMG, they instantly assume I'm an accountant, right? So, well, the firm does hire a lot of accountants every year, but they stream them, right? So you get accountants coming in, they go into audit. You've got accountants, they go into tax. And then you have others who are non-accountants going into consulting, and some accountants as well. But it doesn't mean that everyone has the same sort of background, can understand the same things, right? So likewise, when you hire an IT person, that doesn't mean they know security. And the majority of IT people don't know security because they're designing code, they're writing programs, they're keeping the lights on, maintenance, and theirs is a world of go faster, do more with less in tuning optimization of performance, going digital, etc. That kind of mindset doesn't actually lend itself to a risk type situation because cyber is a risk. So what you actually need are risk mindset people to do security where they can work out a process, what is the chinks in the armor and break through or break down that process. It's a very different mindset. And so what's happening, we see there the wrong kinds of skill sets being hired. They hire an IT person and you think they know security. It's like hiring an accountant and assuming that he's a tax professional, but actually you hired an auditor. It's a different skill set. Yeah, they got the same degree. So that's actually happened quite a bit in the in the different sectors we work in.
Actually, on skill set, I mean, from the institute's research, it actually point out that there is not enough cyber skill sets in the market, and that's also a worry. And how do we groom the next generations of professionals who are skilled in cybersecurity with the different domains? Yeah,
exactly. So if I can just articulate also the diversity of skill sets needed to solve the cyber problem for companies like yourselves. The sort of skill sets we have, we've got lawyers in the KPMG cyber team, we've got people with political science degrees, international studies. Yeah, we've got engineers, we've got IT dudes as well, and we've got some accountants, yes. But really, why they need this diversity of skill sets, because the cyber problem touches all aspects of your companies or client companies. And so why political science? Well, most cyber attacks these days that emanate from nation states are driven by geopolitics. The Singhal cyber attack is believed to have been done by a nation state. Right? 1/3 of residents in Singapore lost their medical data, which is highly sensitive, and it was made known that they were specifically targeting the Prime Minister's personal information. This is to send a message to Singapore. Right? So it's a nation state, no one knows who it is, but we all can speculate that it's someone further north of Singapore. Right? It's not released, but we can kind of work it out. So with that kind of situation going on, I've seen other clients becoming targeted, not just by cyber organized crime, but also nation states, because their companies are iconic to the country. So if that makes sense, private companies now become cannon fodder or collateral damage, where a nation state will attack said country. So for example, if you're, you say Citibank, right? And the US puts in some sort of trade sanctions on XYZ country, guaranteed that Citibank and any other American bank will become a target. Now, this is not a scenario hypothetical. It did happen 5 years ago, right? When the trade sanctions were implied upon North Korea. Okay, do you remember the Sony attack? Right? So they went for the banks, then they went for Sony. The marshal for US peacekeeping in Asia is Japan. And so when the trade sanctions were put in on North Korea, the North Koreans said, look, we don't have a big conventional force. They hadn't built the rockets that could fly the US yet. So they said, well, we have the cyber army. Let's actually show them that we're not a pushover. We got to hurt the Japanese. We got to hurt Americans at the same time. And so Sony Pictures, Japanese-owned company, but Sony Pictures is Hollywood, right? It upset the Americans and it upset Japanese when the attack occurred. So Sony Pictures was collateral damage. Because, ultimately, what was the benefit of stealing all those unreleased movies and the old catalog? It wasn't anything. They didn't care. It was a message. Right? So a lot of these days, private sector companies become cannon fodder. So how does insurance fit in? How does security fit in? I think this is the thing we're trying to grapple with. And you say, with talent, there are not enough people. It's estimated that globally, currently there's about 1 million cybersecurity jobs unfilled. So, and I was talking to Peter before the session. I said, Peter, you're in a unique space. You're a cybersecurity expert. You're also an actuarial expert, and I've never met anyone like him, right? So he sits in that sweet spot. I just do the security part, but I don't do the risk modeling, right? So it's kind of an interesting area. There's a lot of nuances, but ultimately, going back to the Singhal cyber situation, what they needed to do is actually understand the security posture. They never did it because the board didn't want to fund any investment on people, process, or technology tools because it wasn't percolated up to their level. There were no KPIs or key risk indicators that the board were monitoring to do with anything to do with digital use. So if you use any kind of technology, there is a cyber risk. They were not cognizant, but they are now.
Just as a rough ballpark benchmark, from all the clients that you deal with in cybersecurity, how many are actually transfer some of the risk to insurance cover?
Very few. It's often the last thing that I hear about, but there's a good reason. If you were to buy cyber insurance, but you've not done cyber security, so to speak, to level up your readiness, it sends a message to the board and also to the the stakeholders that you're trying to transfer risk without any modicum of responsibility about making sure you're a smaller target. And so more of the investment is going on beefing up security and making yourself safer, and then they come around to insurance later. I suggest, though, to most companies they do both, but they understand what kind of insurance they're getting in the first place before they've skilled up their workforce and improved their defenses, because they may not be covered if they get an attack. But I think, to the point made by my fellow colleagues here, insurance become bigger in the next few years, because more companies now doing cybersecurity maturity improvement.
Thank you, Daryl. And David, have you come across real examples? I mean, you mentioned about the blockchain consortium with Maersk, and actually Maersk have been hit big time on cyber, which amounts to hundreds of millions.
Well, I can cover the Maersk issue, but I think is a bigger thing here you asked for case studies, and you know, when Vint Cerf invented the internet and when Whit Diffie invented encryption, they didn't have integrity in mind. They had exchange of keys and exchange of data. So my first involvement was the Edward Snowden affair. So Edward Snowden, probably as you know, he deleted the system log that connected him with his organization, and therefore he was able to steal a lot of data. And that meant data integrity was lost for that particular agency. So we took the NATO technology from Estonia, because Estonia is the cybersecurity headquarters for NATO, and we applied that technology to the American Department of Defense. That technology then went in from DARPA, went into Lockheed Martin, went into Raytheon, Boeing, those kind of defense agencies, and then into the military supply chain. So we were then able to take a working military supply chain and move it into a commercial supply chain. So now the applications here are more mitigating of risk, as well as notifying if abnormal behavior has happened, and then applying that to insurance. So one of the areas is lithium battery in Hong Kong, where lithium batteries are potentially, if they're counterfeit or if they're recycled and they're not made properly, they can blow up an aeroplane and a cargo plane, and it's a great concern. So we need to apply this data provenance, if you like, which we did from satellite to port, from satellite to military equipment, to the commercial supply chain. So we put Samsung, the maker of the battery, we put the maker of the digital camera, we put the freight forwarder, we put the custom provider, and then the captain of the plane swipes the device, and he gets a complete chain of custody and data provenance of where it's come from. And this mitigation enables us to write more insurance. And the other thing I'm doing is I'm on the Smart Committee of Hong Kong for Smart City, which is a global standard for Internet of Things devices, where we're applying a standard that puts a smart device from 0 to 5, depending on how secure it is. So, I mean, if it has a blockchain and data integrity, it'll get a number 5. If it just has some encryption with some keys that could be hacked, and it's not keyless, so it might be a 0 or 1. And that is something can be given to the insurance industry. In fact, AIG originally introduced me to this committee through David Ho in Hong Kong. So, and lastly, of course, I think IIS is going to be, and Brian Duperrault mentioned this yesterday, is going to be one of the solutions for this, using data points that can be applied into an IIS policy.
Actually, I love Brian Duperrault's comment yesterday when the fireside chat where Mike Morrissey asked, what's your number one concern? He immediately said cyber risk. But however, he was saying that, guys, we're in the risk management business. What better time is that to embrace the opportunity? So, you know, obviously, cyber security, cyber risks are very worrying. However, on the other side, there's lots of opportunity. Scott Riley, the co-CEO of AM Best for Asia Pacific, shared with me just before the panel session, saying that the direct insurance premium has doubled in the US over the past 4 years to over $2 billion amount of premium income. So, you know, there is opportunity there for insurers and reinsurers. I'm conscious of time, so I would ask the floor to see if you have any questions for our Q&A session, which we have 10 minutes. Anyone who interested to ask the panel questions? One there. Thank you, John, from Generali.
I'm just wondering, as an insurance underwriters, how do we manage the cyber aggregation across the different business lines?
So I think that question would obviously lie with our underwriter first. So Jason, can you help us to address that?
Sure. And thank you for the question.
So I'm going to take a step back and say I think the historical answer to that one would have been, making sure we have lots of reinsurance in place, making sure we've got good underwriting guidelines in place, making sure the underwriters are properly trained. And I think all of that still is true today, but I think where the whole market is going, and I think it's going to get relatively rapidly, is really going between affirmative cyber and not having cyber. And I think in the next 12 to 24 months, you're going to see the market saying your property insurance does not cover cyber liability, your general liability insurance does not cover cyber liability, your professional indemnity insurance does not cover cyber liability. And I think the market then will give you the ability to add it back in. And I think by taking the cyber cover out, that removes some of the aggregation risk, and then it makes it easier for carriers in the industry as a whole actually to measure it back up when you buy it back in. So I think silent cyber is incredibly scary, and it makes me really nervous. And I think the industry finally has awareness around that. And I mean, you only have to read, the Financial Times, the Wall Street Journal, the Economist to see, the different issues out there of cyber claims that have either been denied or, made the front page, or perhaps because it's the insurance industry second page news. But I think that's where the market's going to go. I think that's fundamental, number one thing that's going to happen shortly.
Thank you. Peter, of course.
I think this is an excellent question, first of all. Frank, about 9 months ago, I started a project with a major reinsurer, not one of the largest, but they were interested, and they said, we don't want to write any affirmative cyber before we understand our silent cyber book. And what we developed is, and we can go more into detail after the session if you like, develop for them a very detailed checklist, specifically per line of business at the end of the day. And I'll give you an example. We started with the treaties for cargo, engineering, and property. And what we did there, they wanted to do the treaties. They had no interest for the facultative side, because from the facultative side, they could use a lot of threat intelligence at the end of the day and really do outside-ins, inside-outs, whatever. But on the treaties, they were very much concerned because of some of the pending cases we currently have. And fundamentally, there were always three things for these lines of businesses. Number one was, does data represent a physical asset? Because as we know, if it is, if I tamper with this air conditioning and it leads into fire, it's covered for a property policy. Having said that, if I tamper with it and we all start to sweat at the end of the day, there is no physical loss. Having said that, unfortunately, we recognized in some of these treaties that people became so creative that they suddenly said, it doesn't matter whether data is tangible or intangible, it's still covered. And I thought, guys, what are you doing? You're making your treaties bigger and bigger and bigger, and you're creating just an issue. Second point was obviously the definitions around war. What is a war? What is cyber warfare at the end of the day? I'm more than happy to go into one-to-one conversation about this. I have a certain view how these judgments, these cases will end. And the same thing obviously for terrorism at the end. So that was the qualitative aspect. So we really went through these treaties. We put that afterwards, developed an algorithm. So we went through the whole book, algorithmics. The next step was then how we can do it quantitatively. So what we did there is we put specific scenarios up, right, on the based on the cyber house I briefly described. And I disagree with one point Jason said about the incident data. One of the things we have to be very careful when it comes down to using past incident data. Cyber is rapidly changing. What you might have sustained in the past as a loss might be totally irrelevant going forward, particularly if the attacking techniques are changing, or if we bring in new technology in such as AI. AI can be very positive, but it can be negative as well at the end of the day, because the intruders can use it as well. So at the end of the day, the fundamental challenge for you right now is silent cyber. You need to be able to first look at qualitatively at the various treaties or facultative placements you have. You have to have a specific checklist for the various lines, and they fundamentally differentiate. And as a conclusion in it, which I think is very important, all these clauses, these NMA clauses, these LMA clauses, these whatever clauses, the IUA clauses at the end of the day, they were not developed for cyber originally. They were developed for property policies. and suddenly they get on the back foot because they started to cover things they never were intended. So that's the lengthy explanation. If you like to hear more about that modeling approach, I'm more than happy to talk to you about it. Sorry.
So I'm just wondering, would a way of tackling this is have the underwriters and the insurance industry just focusing on looking at single cyber risk policy instead of all the extensions from property and other types of policies, so that you try to minimize the silent exposure?
Because the first fundamental thing you have to do in any treaty going forward is to define data doesn't represent physical asset. Very clear, right?
Data is not assets.
Not a physical asset at the end of the day. Because if you have it otherwise, IP might suddenly become a physical asset as well, right? You destroy, let's say, formulas for vaccinations. You have a big BI claim afterwards, right? Which we might have. Then the second thing, which I think is absolutely essential here, is we need to understand that all the models which are out there, the modeling industry at the moment focused on the direct insurance industry, so individual risks. There's no modeling capability which has not been developed internally for treaties. Then you need to understand when you use frequency curves, that a treaty for excess of loss has a different frequency on cyber than it has for quota share. And then the last thing, which is really the decisive factor, is don't try to compare cyber modeling with NatCat modeling. You have no diversification. It's fully man-made. It's highly severe. It's highly frequent. And most important, you don't have damage ratios. You don't know whether there will be a house hit. It's not like we have in NatCat, we have 20 years experience. We don't have that in cyber. The industry needs to work together. That's why I'm coming back. It's the government. It's the cybersecurity industry, the reinsurance industry, and most importantly, probably will end, and I agree with David, in the capital market. And that means also, by the way, the rating agencies. Because the rating agencies, if you ask a rating agency to which degree today, their model includes capital charges for cyber, I would like to see the answer. I don't believe it includes. Okay? This is fundamental. It should. So my view would also be there, a stress testing of boards for cyber will happen sooner or later.
Thank you, Peter. This is a much more complex issue of aggregation. So accumulation. So I think we have time for one more.
There's one other thing here. If you have data integrity, like we're discussing, you have a lot of data points where you know where something failed and something succeeded. That gives you the capability to create a cyber index. And when you can create a cyber index, you can apply it into a capital market. So, points.
Which will be the predominant capital comes from, because the exposure is getting so big. So one more question from the floor before we wrap up. Maybe in that case, I'll just have a last question. I will ask each of the panelists one key message that you'd like to provide for our audience here to take away so that they can actually do something about cybersecurity. So let's start with Daryl.
Oh, I'm still thinking. All right, so cybersecurity. Start with an maturity assessment, whether it's your company or your clients before you insure them, is actually something to understand the baseline, right? So a lot of companies do not have a security baseline that you can refer to. And so without that security baseline, and you can refer to those standards I mentioned before, NIST or NIST and ISO 27001, without some baseline, it's going to be very hard to work out what to do, right? So my takeaway for most clients, if you do only one thing around cybersecurity, do a maturity assessment, know where you stand today, and have a roadmap to where you want to be. And so that's kind of, I think, a very important point.
Thank you, Daryl. Makes perfect sense to establish that baseline. So the companies who haven't gone through a cyber maturity assessment should do it immediately. Jason, from an underwriter's point of view, what key message would you like to provide?
Yeah, look, of course, I'd want to say everyone should have cyber insurance, but I think the bigger message is this really is a boardroom level issue, right? It has to be. And you've got to get the right people on the board. And I say that with my old, directors and officers hat on. But This is not, the CIO or the CTO office issue. This is a boardroom level issue. It needs to be there every single time. And I think when people start thinking of it as a boardroom level issue, they'll take the entire enterprise, risk, more seriously that way.
Thank you. I think that goes back to Peter's earlier point about having chief security officer on the board level, which would make a lot of the impact in the entire organization. David, one key message, please.
Well, one key message, I guess, is to make sure that we do have the crown jewel data signed for integrity, to keep on my message, not just for encryption. And when it's when we have that kind of integrity, we've not only mitigated some of the risk, we can go into new markets. Like I would suggest that the premium protection gap for smart devices is quite high. It's difficult to put a number on it. It could even be 500 billion. And if we have these kind of devices and rating done, then we've got new markets, and we can replace some of the lost premium being caused by technology with new ideas. And,
right. That's also very fundamental. Thank you, David. And last comment from Peter. One key message, please.
2 points. Number one, let's make sure we don't have silent cyber exposures going forward. That means we need to proactively exclude silent cyber. We might have to bite the bullets with some of these cases, but at the end of the day, let's make sure going forward we only have affirmative exposures, because otherwise you will not be able to properly underlie capital, reserve capital in the long run and price it. The second point, let's make this product simpler, please. Simpler, the coverage. Because one of the things I'm often hearing from board is they don't understand the cover. We have experts like AIG and others. Yes, they bring very good value to the table. They can explain it. But as a market, we need to get together. Simplicity is really the word going forward as far as cyber is concerned.
Yeah. Simplify wordings, standardized wordings, less warranties.
Yes.
That will help. Thank you very much for our panel. And a quick recap for the takeaway messages that I think we should all be aware of. 1, cybersecurity assessment. 2, bring cybersecurity to the boardroom level. 3, data integrity is fundamental. 4, silent cyber exclusion. And 5, keep it simple. Thank you very much. And thank you for all our panelists and experts providing insights to our IIS audience. Let's give them a big hand.